We're just following this news right now. The U.S. and U.K. banning Russian oil imports. We continue to see prices surging down off the highs that we saw right after that was announced, but still Brent crude at about $125 a barrel. But as Bree Jackson just mentioned in that report before, we only get about 8% of our oil imports from Russia, and we're trying to source from other countries like Venezuela. How long do you see this price impact here in the U.S., and how long do you think that it's going to take us to find these alternative sources or to ramp up domestic production?
Oh, Frank, that is a big question. And that's one of the biggest things we're trying to really put a case scenario on. It's hard to make one assumption, but it really depends, one, on how the war plays out between Russia and Ukraine. What becomes the end of it? Is there a resolution? Is it one side really claiming victory over the other? And on top of that, then we need to consider, where are we sourcing our supply from? It's no secret that energy shortage has been one of the bigger pushes of inflation here domestically in the U.S. and abroad. So for us, the solution to that really could be is to get more supply, because even if we do tighten monetary policy and do rate hikes, that doesn't directly address the energy issue.
Yeah, you know, that's something a lot of people have been pointing out. I want to ask you about something else that I know that you're looking at, stagflation. As we see these oil prices rise, gas prices rise, are we in danger of stagflation in the near term?
It's something that's on people's minds, especially when you see the yield curve and how quickly it has flattened. Now you're considering the Fed hiking the front, while people are still a little bit uneasy. Well, I shouldn't say a little bit, quite uneasy on how longer term growth prospects could be impacted by this war. It just brings into mind the potential possibility for stagflation. But I will say it's not our base case at this moment. The U.S. has recovered pretty strongly out of the COVID pandemic and continues to see positive growth. We continue to expect positive corporate earnings growth, but it's always something on our mind when we have this sort of uncertainty situation with what seems to be inflation ramping up.
Before we let you go, I want to talk to you about what was the phrase of 2021, supply chain. You think there's some supply chain issues that may arise from not only the Ukraine conflict, but also the rise of the oil prices. Where do you see supply chain changes happening globally? And how big of a deal is reshoring production here in the U.S.? President Biden made it a talking point in the State of the Union, but also globally.
I think it's become more and more in focus. And this was even before the pandemic hit. We had trade tensions between the U.S. and China. It became a point for politically on both parties. So right now, it's become even more of a concern, and not just in the U.S. Having these domestic supplies and ability to produce at home is something that's become a global center for focus for everyone. So I think that's going to be pushed even more. And as we go forward, we're going to see the supply chains hopefully ease. There were indications before the war broke out that we were seeing lead times improve in certain parts of the market. But now, like you pointed out, with the situation geopolitically, things have gotten even more dicey. But that, again, is another driver of inflation, another sore point, and another thing that's going to put the Fed in a very difficult position come next week.